The hot housing market saw a bit of a thaw in February as winter storms impacted housing starts across our country. Let's break down the data and bring in the experts. Brad Hunter is with us, President Hunter Housing Economics, and Jason Haber, broker at Warburg Realty. Jason, I'll start with you. What did you think of the data that we got in here? Do we take it with a grain of salt? Because it wasn't that great today.
Yeah, 100% a grain of salt. You know, winter storms are kryptonite to the housing market, and particularly housing starts. And so this February, we had winter storms. We were basically in Frozen 3 in the way the weather patterns shaped up. So I would only look at it with a grain of salt. What's more important is that the permits going forward for builders are higher than at any point they've been since 2006. And so I think we have to be forward-looking when it comes to that right now and understand where the market is headed and what its trajectory is.
All right. I mean, because I did see that building permits dropped month over month, but I guess you're talking generally in the big picture at the levels where we're basically sitting. That being said, Brad, your thoughts?
Yeah, exactly. And yes, permits are up 17% year over year, and that's the important thing to look at. And starts are down, but not for any lack of demand. The slower construction pace was really caused by shortages, high lumber prices, problems with other materials, plus the intense winter weather. Appliances, the vast majority of the builders are having trouble getting enough refrigerators. So those are the things that are slowing things down. The demand and the sales are still very, very strong.
So when we look at mortgage applications, which declined more than 2%, Jason, that doesn't concern you. I mean, there are some folks who obviously think mortgage rates will probably be around 3%, 3.1%, maybe 3.3% by the end of the year. What are your thoughts on that?
Yes, the potential of rising interest rates are definitely a headwind and something that we'd want to be cautious of. Still, of course, historically low and very attractive. But when you look back a few months ago, they're higher than they were, and we're all watching the 10-year very closely right now. I know we're eagerly waiting on Chairman Powell's comments and seeing what reaction the market has to that. But yeah, the rates are higher, and so when you have higher rates, you're going to have less refinancing opportunities out there, and it's definitely something to be mindful of in the market moving forward.
Yeah, Brad, why don't we expand on what you were talking about supply earlier? And you think that people are still migrating and moving out of New York into places like Florida, for example, but it's supply that's really the problem. So you think that demand will continue to boom and prices, I guess, will go up? I don't know. You tell me.
Well, I'm glad you mentioned the Florida and the New York connection. Florida demand for homes is bonkers right now, and that's an economics jargon term. But you know, in addition to the data, you see the anecdotal evidence, all the out-of-state license plates on the road, traffic jams. And builders in Florida are often raising prices deliberately to slow down sales. They can't build fast enough, plus the materials constraints that we're talking about. But the New York companies, the financial firms, are looking all over Southeast Florida, all over Southwest Florida, Orlando area, everywhere. And this strength in demand is just still increasing, and home prices are being bid up very rapidly. We were talking about the mortgage rates, and of course that feeds into the affordability issue, right? If the 30-year bond markets seem to be telegraphing you're going to be above 3.5% in at least over the next 3-4 years, that's going to increase affordability problems. Home prices went up around 11% last year. Probably going to go up again. So affordability is still going to be pushing more people into rental for sale options and or rental single family options. And we're seeing that really booming as well.
I think the year-over-year numbers are really important because when we look at the National Association of Home Builders index, and above 50 is the expansion, and we're still well above that, even though it dropped a little bit, but it's at 82 right now, Jason, and it was at 72 last March. Hit a high of 90 in November. So when you look at the home builder names, whether it's Toll Brothers, Hovnanian, Pulte, Meritage, just to name a few, which ones do you think they're all going to do well? Are they all winners here?
Well, the sector looks like it's a winner going forward. And let's talk about Lennar for a minute. I believe they're up over 10% today. I think the stock is at 98, which is a 52-week high. I mean, these are a lot of strength in the housing market going forward. And listen, I know there's a lot of talk about Florida versus New York. There is this rivalry between the two. I would be buying in New York right now all day long. I think there's going to be a real upside there coming out of COVID. And I'm excited to see how that unfolds. But I do think a lot of the home builders are going to be showing strength.
I'd like to thank you both. It's a big day for us all. Fed Day. We want to hear what they have to say about interest rates, which obviously correlate with housing. Great to see you both, Brad Hunter and Jason Haber. Thank you.